Well, well. So, hello, people of YouTube. I hope you're doing well. I sure am. So, let's just get started. I just kind of want to post a review. I intended doing this on Wednesday, anyways. But I'm just so glad that the market panned out this way. I mean, this was beautiful. This is just one of those times. I would say moves like this and to be able to predict them is truly a blessing. And, you know, I would say it happens about 2 to 3, sometimes 4 times a year. And just to be able to compress it all into a 30-minute video, have it posted before it happens, and just be so pinpoint precise it's a good feeling. I want to start off by saying this is just a review. I'm not going to be talking about what I think is going to happen because it's already happened. So I did mention that, should something like this happen, I'm going to take a step back and I'm going to slow things down. I'm really just going to close out for the year. We are 11 days, 12 days away from 2025, and I have been so locked in this whole year. I'm kind of going insane, but in a good way. I'm excited for 2025, and I think you should be too. I'm gonna attempt to post much more content outside of just reviews. I have some personal things I'm working on and some other projects I'm working on that I want to get out to YouTube really, really badly and just start, rolling things out that provide real value other than where these candles gonna go. It's great and all, but if you can't get your personal orders in alignment, then it's nothing. So health is wealth, and I'm a big believer of that. So yeah, has nothing to do with the chart, but it has everything to do with the chart. So I got a big smile on my face seeing this, looking at this chart, the monthly chart. I started off, and I'm gonna try to work off of what I said in the last video. So I started off saying I liked the previous month high, and that was my monthly draw, and that surely was the monthly draw. So there's that monthly chart. Let's hope slides work today. All right, there we go. Previous month high transposed down to the weekly chart. You can see that we did work off of this order block, right? Inside here, even though we did not cross this opening price, these are things that you sort of start to anticipate, and this was kind of what I was working towards. So I'm gonna dig a little bit deeper, not too deep, but a little bit into as to why my mind was leaning towards what I said, and give some insights. So alright, slides is not working, but I'm not gonna let that ruin my mood. Alright, so here's the new week opening gaps. I don't remember if I showed this, but this is something I always log. I like to... Whoa. What is going on? Alright. I like to put the close proximity new week opening gaps on my chart and just, put this out there. The way I do that is I have all new week opening gaps written down on a piece of paper for 2024, 2023, 2022, 2021. So, I'm not missing a single new week opening gap. Based off of Sunday's opening price based off of the last week and sometimes the week before. That's how I'm kind of keying up on new week opening gaps like this, and this, and this one, and so forth. So I don't like to cluster my chart too much with them, but you know, it's gonna cluster a little bit. So, all right, come on, slides. What's going on? There we go. Daily chart. So right here, I basically went along the lines of I wanted to see it trade lower before it traded higher, right? And so I pointed out this breaker, and you know, any average trader, I mean this with all due respect, but any average trader who's looking at this, who's giving all this narrative, who's giving all this detail behind their analysis, I don't know. I'm sure there's a couple people out there, but to me, this is really nice. Like this, what happened was just so satisfying to the point where I almost have to force myself to close out this year, because I know, A, it's just not high probability anymore, you know. And you know, you can argue all you want on what high probability and low probability is, but in just the past month, I've sort of kind of been like really picking up the understanding of high and low probability. I've always wrestled with, you know, what's high probability and what's low probability, and I'll say this, that if you are struggling with that, just because you looked at the chart, you know, the day after or even the same day and just after the market closes, just because you looked at it and you found whatever PD array you're working with, just because you saw it after the fact and it looked so easy does not mean it was easy in the moment. There is, let's just say, a million different things that have to be there in order to kind of get that feeling of high probability. And it's not a million, it's just a lot of things that really, like, I don't think you can put it into words. I think it's like, it's a feeling. And everyone's sort of definition of high probability is going to be a little different. And that's why I don't like looking at Twitter. I don't like looking at, you know, whatever else. Whoever says whatever. I don't like looking at it. That's like external sources, and who is to tell me what is high probability? You know, someone could have looked at this chart on Sunday and said, I don't really like it. It's low probability. And, you know, person A could have said that, and then person B could have said something else. But anyways, trades into the breaker high, and I said I'd like to see it above the mean threshold for risk off. So we had Monday's trading, we had Tuesday's trading, and then we had Wednesday's trading, and the entire time it stayed above there. I pointed out this low. It was this low. I said I wanted to see it trade there. That was my high probability draw on liquidity. I said that, you know, if someone had just given me the chart and put a picture of the chart in front of me, that is the low that I'd pick. And you're probably not understanding right now, but I would really recommend for anyone with the interest to just go back and look at that. All right, something is going on with my slides. It's so weird. I'm not using slides anymore after this. Jeez, this is crazy. Okay, give me 1 second. All right, so switching over to photos. And so here's that. You should be seeing this on your screen, hopefully. Okay, let me recollect my thoughts. Yeah, so 4-hour chart. This was the low that I was talking about. So there was an arrow on that blue arrow, and you can see it was met right here. So check Sunday's analysis for that. I showed you these new week opening gaps, exact same ones, and that's, you know, it's just really, really, really nice to see it kind of follow the theory. That's what I'd like to use, and that's what I'm going to stick with. But yeah, I can't really remember too much of what I said, but it's, what I'll be doing is A, checking all my written notes, and B, I'll be watching the old YouTube video, and then I'll be watching this YouTube video. So that's how I'm going to be studying. And you don't have to be watching my videos. It's just kind of like a frame of reference of how you can format your videos going forward, how you can write these annotations, and you'll notice how everything is pretty consistent with me. And that's one thing I'm really I take pride in. No, that's one thing I like about my annotations. You'll notice that the sort of ranges, like from this left side of the chart, like the candles, they'll be the same. And the reason that is because I like my charts to be, when I screenshotted them, as similar as to when I, take the screenshot after. So I hope that made sense. But basically, the only thing I want is what I would like to see, and then in the screenshot, and then it happening after, or it not, but it really helps me kind of process and digest all the information in that screenshot and having it all organized. Hourly chart, FOMC, right there. Zooming out, you can see it was about Monday, 6 p.m. where this level was hit. And zooming out even more. So, Monday, Tuesday, Wednesday, you can see once we hit that level, things started to reverse. So that's that profile that you can kind of base your analysis on, or just get an idea of what's going on. Now, a move like this, I wouldn't do too much after. I've really been trying to kind of improve that aspect of my trading, and just not even improve, but just reinforce it as much as possible, because I don't want to be that guy. And I think we all know what I'm talking about. Just that person who's, what's next? Like, I don't want to be like that. So that's why I'm forcing myself to step back. I'll give myself a break and kind of rest up for 2025, because I'm going crazy 2025. So basically just looking back from this point of price, and then looking back to the new week opening gap, and just a little bit before, because I mentioned this dealing range. You can see we swept sell side, and then right after that we started to reverse, and it happened all on the premise of FOMC. So I do want to talk about this equilibrium price, why it's so important to me, and what I said in the last video. Basically, I was just saying that, on the 4-hour chart, if you go to the 4-hour chart, and we'll go there for just complete purpose. It was right here. I was looking at the 4-hour chart, and I basically said around right here or here, I said if it comes up and touches the equilibrium in the next candle, or the next 2 candles or so, it's not as heavy to me. And that is the direct outcome of this. That, it basically went up in there, touched the equilibrium, went way further into that dealing range, and then kind of just stuck around there. Market closes 6 p.m. We open, take that sell side, and then we never work back down lower. We just blast straight up into the previous month high. So that those, when I say feedback, that is exactly what I mean. That is like a skill that cannot be taught in a book, and honestly cannot be taught in a video. But I mean, it was taught to me, right? So I'm really hoping that, you know, this is exactly what goes on. It's just passing down knowledge. So yeah, here's the ES monthly chart. Now, first things first, we are looking at the next contract code, meaning the March contract. And I mentioned this on the previous review that this week is a rollover week, meaning that, you know, we roll over to the next contract because the previous contract's open interest slowly starts to tether off, and this week, this Friday, it's gonna die. That's basically what's gonna happen. It's gonna expire. So around Tuesday, just like I said, Tuesday is the day that the rollover occurs because the open interest shifts. So very simple. Core content, you'll find it. All right, weekly chart. And so let's just point out that order block, I did say I'm not going to place too much emphasis on it, but I, to be fair, was not expecting a move of this magnitude. And, you know, it's really hard. It's not hard. It's just like looking at the probabilities. If you're expecting a move like this, if I were to sit here and in 2025, I were posting an analysis every week, that would be 52 analysis videos. And if I were to sit here and kind of expect a, what, from 6100, I think it was, let's just say 6125 to 5947, that's over 100 handles, almost 150 handles, over 150 handles. If I were to sit there and expect a 150 handle move every single analysis video, how many times would I be right? That's the way I look at it. So I'm not trying to, you know, decrease my probabilities. I'm actually trying to increase them. So I did mention this fair value gap, and the idea was, obviously, if dollar is risk off, then that means S&P is going to move lower. Now, before I forget, I did mention that how NASDAQ's market structure was completely opposed to S&P. While NASDAQ was making higher highs, the S&P was working inside that daily inversion fair value gap from December 4th, and I'll get to that on the daily chart. And, you know, so basically the idea of this weekly fair value gap was we were targeting the consequent encroachment of this as an idea of it repricing to it to offer efficient delivery. Now, for trade ideas and for targeting, trade targeting, it's never a good idea. Me personally, and this is just me listening to the word of ICT, I don't like to target these lows because, once again, it decreases your probabilities of being right. So it's not a good idea to target these lows. And, you know, in order to kind of avoid that, I just use it as like a moral victory. Meaning if it hits it, you know, I felt great watching this. It was very nice. It was very fun. It was, looking back at how I posted the analysis and how it panned out, it was very satisfying. So we hit the low, and I said that if we hit the low, we're likely to enter a period of time distortion. I think that still applies. Like, I really do. I mean, we have 2 days till the week closes, and then we enter holiday season, and I'm done. Like, I'm gonna not post anything on YouTube till 2025, and when I do, I'm coming back better. So I'm going to use the time to rest up, work on some personal things, and clean out my closet, basically. Yeah. This order block right here, it's really nice being able to like me myself in my own journal, in my own study. It's very nice to see that kind of pan out live and sort of build my understanding on the order block. Because look, we traded to the change in the state of delivery. The dollar was bullish. We were bearish on S&P, and it went up in there and traded to the mean threshold and then slipped. So that is a very nice feeling. Yeah. New week opening gap. Here's that daily chart. You can see how we worked into that consequent encroachment of the, this is a long annotation, but daily bearish inversion fair value gap. It's formed as a BISI, and the reason that it is a volume imbalance is because there is a gap. Where is it? Well, actually, I have settlement off over here. No, it's not settlement, sorry. On the last contract, there's a volume imbalance, so I kept that going forward. And so you can label it however you want, but idea is that it's inversion fair value gap, and it works up into it perfectly. Like, this is perfect to me. And just look at that. And you're going to see all over, people are going to talk about this today. They're going to talk about it tomorrow. They're going to talk about it Friday. They're going to talk about it going into next week. And I think there's only a very few amount of people who talked about it before, right? So I'm not really trying to sound a certain way, like a negative way. I'm just being honest. Yeah. New week opening gap. New day opening gap. Alright. Here's the 4-hour chart. Nothing changes. I guess the only thing that changes, and sort of my eye has picked up on, is usually when we see a big move like this, and this is going to be like elementary learning, but these candles start to crunch up together, and then these levels will start to kind of become congested. So it really doesn't have anything to do with like price, but usually when I see this, it just kind of means like, okay, we've had a big move, especially if these candles start to scrunch up together. So, you know, had you looked at the market during this candle, this would have looked very like stretched from the top to the bottom, if that makes sense. I really hope that does. Hourly, once again, nothing different. And zooming out, you can just see how sort of like scrunched up these candles look. It almost looks like an Asia session, and like a terrible Asia session. That's all it looks like to me. So when you get a move of this magnitude, yes, you're gonna get a move, you know, after whichever direction. You're gonna have some movement, you're gonna have some gyrations, but it's just a good habit to step back, especially considering it's the holiday. Like, there is no better reason to just slow down right now. And here's that, another view out. So you can see that we have the Wednesday opening here, and accumulation right at the consequent encroachment, and this SIBI right here, hourly SIBI, and it works off of that, and distribution down here. So not a hard concept to grasp, but it's going to require some work. Alright, NASDAQ monthly chart. Previous month high, previous month low. It should actually be placed here. So this is the previous month high. This is the previous month low. It's kind of bothering me, but I'm not going to go back and change it right now. I'll do it later. Like I said, I am chilling for at least 2 weeks. You know, I kind of want to start Twitter Spaces in 2025. I want to start vlogs, maybe, you know, and I want to start like kind of like podcasts, which is basically like Twitter Spaces, but just really like deep personal insights. I want to start talking to a group of people, like an audience. I want it to feel like I'm really engaging with people, which is like charts don't really get there. I don't feel like I'm talking to anyone right now, so you know, if you are listening to this, I hope you're doing well. That's it. There's that, which should not be here. Wow. Weekly chart. So far we have a couple things wrong. Previous month high, previous month low, and then that daily level should not be there, but it's not wrong. It's just that it'll be showing on the daily chart. So new week opening gap, and then there's that daily chart. Sorry, I got confused for a second. Anyways, so we have the high here and then the low here, and the reason I got confused is because right when I saw this, the gap usually should be here, but because we have a volume imbalance here, it becomes anchored to the closing price of that. So that is your daily fair value gap, December 16th. And now the protocol for this is, because we had such a move lower, I would expect a move. I'm afraid to say this, but that's because, okay, honestly, what I would be looking for is it to return back up into this, and once we get here, that's when I would sort of reassess and think, okay, is it going to become inversion? Is it going to reclaim it and then work higher? But I don't know yet, so I'm just kind of like sitting and watching. And also, I said I'm going to step back for 2 weeks, but I'm still going to be logging, and I might post something on Discord, so you can join my Discord down below in the link or in the bio. I'll put the link there this time. Feel free to join, say what's up. I respond to everyone. If you want to talk about trading, you know, go ahead, but I really like to talk to people. That's it. So I don't even know what that means. It's just like, all right, new week opening gap on the daily chart. So transposing from the weekly to the daily, and these levels are derived from the 1 minute. You can use the 5 minute, you can use the hourly, whatever you want. But I like to put them on everything because it just gives you that oomph. It gives you that oomph, right, that you need with a new week opening gap. So yeah, new week opening gap, respect, love it, my favorite. That is my thing. 4 hour, not really much, you know. I mean, I don't have much to say about the Nasdaq. I'm an S&P kind of guy. What can I say? But you know, Nasdaq does have nice moves here and there. Large extrapolated ranges, just like this one. So who's talking about it? Everyone right now. Everyone is talking about it. You know, I'm gonna go on Twitter, and the first thing I'm gonna see is, oh my god, guys, can you believe this? Yeah, I can believe it. But okay, I'm gonna stop myself. New day opening gap, and then already we have the new week the new day opening gap for going into Thursday, which would be the closing price over here and the opening price here. So already like my eye, the first thing is just like, if I were to once again If I were to go on a 50-mile run right now, sit down and see this, the first thing I would do is ask, okay, where's the Thursday new day opening gap? All right, and it would be from this close to this open. So extend that out. So let's just say 21.48. Oh my God, 21.489 is the level, like the line in the sand. I would use that to measure the moves up and down, and whether sell side is hit, whether buy side is hit, and sort of build my understanding on fluidity, meaning like how the market gyrates, how it moves like a living being, right? Like how it works up to grab buy side and rebalance inefficiencies, and how it moves down to attack sell side and rebalance old inefficiencies. So that's kind of just really all that this is. All right, and the hourly chart, same thing. Not much, when it's a big move like this. I'm serious. Like, there is not much. Like, what do you do after this? You can push yourself, but you push yourself enough and you're gonna fall. That's all I'm gonna say. Cause sure, you can target wherever in this price run, but why? Enjoy the holidays, man. So zooming out. And yeah. And with that being said, thanks for watching. Happy holidays from Schlock Speculates. I hope you appreciate the content that I put out this year. I almost want to say my hit rate was, definitely 80% or above on the weekly analysis, but I think it's a little higher if I'm being honest. I'm not gonna go back and check that because I have a lot of other things to do, and I'm gonna try to wrap it all up this year. Right now, I am so tired, and I just want to go to sleep. But I have to go get my calories in and get my protein in, because I am on the gym grind again. So 2025 is going to be great. You need help with anything, DM me on Discord. I'll help you. You need advice, girlfriend advice, weight loss advice, whatever, man. I'm here for everyone. If you're feeling lonely, message me. I'll respond, and I hope you all have a great rest of your week. I hope you all have a great holiday. I'm not a holiday guy, but this move that was the icing on the top. So yeah.